What's going on, everybody, and welcome back to the channel. I'm finally gonna make the video that you guys all keep asking me about, which is the Friday strategy breakdown. How does the Friday strategy work? You guys keep asking me about it. And look, I'm finally making a video. So if you've been waiting, make sure you leave a like, subscribe, leave a comment, be join our group, which currently is on sale on your first month if you're a new member. If you use code 39, that's the number 39 at checkout. The link will be down below. So let's talk about the Friday strategy breakdown. If you've seen it on my TikTok, on my Instagram, of course it's getting kind of viral at this point just because of how good it really is. And the thing is, it's not just good; it's just very simple. It's not this ICT bullshit. Understand all these crazy concepts that work 50% of the times. It's super simple. And I want to talk to you guys about the importance of backtesting. I found this strategy simply backtesting a theory that I had. I just traded every day, and I noticed, hey, these Fridays always feel like very like a trend day. So I went back to the start of the year, and I went to look what happens on a Friday, and is it a trend day? And I found that most Fridays tended to follow whatever the trend was. So if it was a bullish trend, it was bullish the rest of the day. So it was best not to fight the trends on a Friday. So, understanding that, I found, okay, what is the best way that I can find for me to look for an entry or looking for a trade? So I came up with this kind of variation of the open range breakout strategy. Open range breakout is just 15-minute. You follow the breakout, but oftentimes it's a very flawed strategy. Doesn't work that very well. Doesn't have a high win rate. But I used it kind of as my cornerstone to figuring out a strategy for this Friday thesis that I had. So the strategy goes: you wait for the first 15 minutes to close. So that's 9:30 a.m. EST, which is the New York Open. It's when the Nasdaq open, to 9:45 a.m. EST. So that's the first 15 minutes. That's when options start trading at 9:30 a.m. Then you wait for a higher low to be broken, and then you follow that trade. You look for at very least a 1-to-1 RR, so you're gonna take profits. Do not take profits before that. Do not make a 0.5 RR. Overall, this seems to be the best risk reward. You can leave a couple runners after that. You're gonna use your opposite side as a stop loss. This has currently a 96% win rate. I'll just put 9% plus, just because that sounds a little bit better in my opinion. Also, keep in mind that, again, I tested this every Friday starting the beginning of the year. That's 24 Fridays roughly. So I'm not telling you this is like a 1,000 data points works 90% of the times. The next 6 months could very well go down, so do keep that in mind. I would say once you have over 50 data points, it's really, really solid. 24, it is a little bit on the lighter side, but as you're gonna see, we're gonna go over the last 5 Fridays. You're gonna see that it just works, right? And people have used it, and people are using it, and they're making a ton of money doing this. And again, next thing I tell you before we go over into the charts is this is only backtested on S&P 500 ES. That's what I'm using currently. Chart. Do not ask me if it works on crypto. Do not ask me if it works on NQ. Don't ask me if it works on forex. I don't care. Do your own research. I'm showing you guys how to backtest it. Go figure out whatever the pair that you like: gold, oil. Don't be lazy and just always want a handout. Always want people to show you exactly how to do everything, right? I'm giving you really good help here. Go to the statistics. Now take this and go help some other people by figuring out your own. Anyway, let's get into it. So this was today. You can see the 9:30 open was right here. So this was your 9:30 open, this candle. So that's what you mark 9:30 all the way to 9:45. As you can see, this was the 9:45 candle. So within this range, you look at within this box of 9:30 to 9:45. So these three candles. You can also use the 15-minute candle. I personally like to stay on the 5. So this was the low, and this was the high. So I marked my high, and I mark my low. In this case, you would just wait. All you gotta do is wait. Which one is the first one to be broken, right? A lot of people were trying long, right? People were longing right here, and they got wrecked. So you would enter short once this finally breaks. And no, you do not need to wait for a candle close. A lot of people think you need to wait for a candle close. A lot of people need to wait 5-minute close, 15-minute close. You don't. The way I backtested this, as soon as it breaks, wherever side, in this case, this candle breaks the side, you enter short, in this case, set this as your stop loss. Sure, you can use a hard stop loss, and you target a 1-to-1. In this case, it will be right here. And you can leave a little a little runner, maybe a trailing stop loss runner. In this case, it could have technically ran to like a 1.5 RR. As you can see, price didn't really do too much today, so that was probably the best move of the day you would have caught. this 1-to-1 move, this flush under that 15, the 5-minute low, right? And he gave you a nice even entry right here. He goes, he stayed, excuse me, he stayed for the next 5-minute candle right on that. Give you a little tiny couple points of a drawdown, but nothing crazy. And then it flushed. It's really as simple as that, right? This is literally all that strategy is. And I'll show you guys that this strategy just tends to work. Let's go look at the previous Friday. We'll look at last Friday. We go August. We're already in August. Isn't that crazy, guys? Friday the 26th. We'll just jump to there. We'll also move this to Friday 26th. Right, I changed them so that we stay within just that one Friday. Then we zoom it out. This is Friday 26th. So here you go. 9:30, the low and the high. As you can see, this Friday was, I'll show you guys a little bit of what can go wrong with the strategy a little bit. This again did work, but you did suffer a little bit of drawdown, but you do just have to simply trust the strategy. So as you can see, this was your high and this was your low. You would have taken it long right here, targeting your 1-to-1 using this low as a stop loss. Then, so your 1-to-1 would have been right here. As you can see, you almost hit it, but then it retraces on you. And this is where you just kind of like have to just not touch it. Say your orders and just walk away. A lot of people would have kind of stopped out here, or they would have gotten wrecked here. The long wait. This candle right here would have hit them in drawdown, and they would have blown up their account. So right, this was a 12 candle, and this is the main thing you have to worry about with this strategy. Is you have to keep in mind what is your stop loss going to be, right? In this case, your stop loss was 17 points, right? For some people, that can be a lot, depending on your account. If you're just going heavy, so you do have to keep that account. You do have to understand and say, hey, I want to risk my 1% of my account, or 0.5%. My stop loss is going to be 17 points, so you do have to trade accordingly. But again, so this kind of chopped up. Eventually, you guys see it followed it. It never reached your stop loss. Because the whole thesis of this is that your opposite side is not going to be touched. It's not going to be touched. It should not be touched at least, or 96% of times it will not be touched. And again, this was one of those that you could have gone all the way up to 1 to 2 if you would have kept a runner. That's why sometimes holding a runner with trailing stop loss to your 1-to-1 can be beneficial, because you can see here this kind of maybe would hit your trailing stop loss here, but you could have got definitely a nice bit of gains. Because think about it, even as a 1-to-1, if this had a 60% win rate, you'd be profitable. Now we're talking about 90% win rate at a 1-to-1. Again, really solid. So you guys can see we're just going down to Fridays, right? I'm not sure you guys every Friday, but if you just look, I just keep going down to Fridays. Is this gonna keep working? So like people are like, no, it's not true. It doesn't work. And I'm like, well, go back test it yourself. I tell people, go I'm doing the work for you. Why don't you just go back test it, right? So this is the 9:30 again. 9:45 goes up to this candle right here. So your high would have been in this 9:40 candle. Guess what happened? This one was beautiful. Honestly, it's probably one of my favorite ones. It gives you this fair value gap, came down to retest, right? Again, stop loss a little wide here, about 23 points. Again, maybe you can make a little bit of variations to this. I'm not saying you cannot make your variation to this. I'm not saying you cannot add a fair value gap, whatever it is. But I'm just simply showing you that 1-to-1 how this looks and it works, right? Without you having to think. 1-to-1 right there. Again, this is another one that you could have maybe kept one trailing, could have hit 1.6 here. Probably would have gotten stopped out here on this trailing if you just trailed it. But again, another one that you could have gotten a little bit more if you just held there or you risked a little more. But you can see we got 3 Fridays in a row. Have you gotten 3 Fridays in a row with a loss? Well, this strategy would have gotten you that. We'll do 5 just because 5 is a solid number. But again, you can backtest this the whole year. I'm already giving you what the statistics are. That was a beautiful one. All right, so we are another Friday, I think. Where is the Friday? Right here. There you go. And going over the Fridays also, it kind of helps me explain to you guys what I will be looking for in different situations. Some more situations will come up. 9:45. So this situation comes up, and then people ask me, what if the 9:45 candle is either high or low? In this case, you can see the 9:45 was the exact high. And I tell you guys, you still get a market. So if the next candle goes above this, in this case, look, this next candle dipped down and back above, you would have longed that. You would have longed that. And this is where you can use the 1 minute a little bit to kind of help you out. In this case, wait, I don't know where wait, where's it? Where did you guys go? Where did you go? Candles. Am I just missing? What am I missing here? Let's go back to that day. Because I don't know what the hell just happened. July. We were the 19th, right? It skipped me because I changed the time frame. Go to. There you go. Okay, so we did the 19th. Sorry. Okay, so we did the 19th. We gotta go. We're doing the 12th now. The 1 minute or 12th. I'll show you guys the 1 minute just because it'll help kind of understand this this one a little bit more. So Sunday, the 12th. I don't know what the hell's happened. I don't know why the 1 minute is not working. I don't know. The 1 minute is not working today, guys. Alright, let's do it just back to the 5 minute. I don't know what's wrong with the 1 minute today for me. Let's go to the 12th. 13th. There you go. I tried. Dude, Alright, we're back to the finally been back. But if you see here, you get this wick low and then back above, then that means you broken a high, and you should long. If this next candle never broke above that, never went higher than 5652, then you would have not touched that. But in this case, again, you would have longed right there because it dipped down, and when you went back up, you would have used it. This is not too bad of a stop, about a 10-point stop, targeting 1-to-1. And again, this is another one. It's if you trail, it's right. I think there's a lot of benefits in trailing some of your profit after you hit a 1-to-1. If you trail this, there's a good chance that you could have called this. This would be a massive. This could be the massive one, right? Let's say you call even that. It would be 1-to-3, 1-to-4. And again, you can also then kind of implement your own strategy. Like, hey, if this fair value gets respected, I'll stay long. And as you can see, it did get respected, and just kept going higher and higher. And now I believe we're all the way back we're almost all the way back, right? We're almost all the way back from the whole month, at the very least. Friday, July, another day, another dollar. So again, let's see, this is the 9:30 open, and this is the 9:45 candle, right there. And this was the 9:45 high. And here you go. This finally would have been one that it would have not worked. Finally hit one, and again, you would have longed right on that high, targeting your 1-to-1. So we've been roughly right here. And it's an unfortunate one that comes down and actually ends up being the overall trend. Would have actually stayed to work, but ends up waking below the below the lows, right? Below these lows, unfortunately. This would be one that you would again technically stopped out in, but then it would have worked, which would have sucked. But hey, it's part of the strategy. Again, it would have been a pretty small loss. Everything considered, it would have only been a 10-point loss. So that we went 1, 2, 3, 4. We went to the past 5 Fridays. So I hope this video helped you guys understand not only strategy, but the importance of backtesting and why you need a solid backtesting platform. I'm launching Tradeful very soon to help you guys backtest and do exactly what I just did, so you guys can come up with your own strategies and your own ways to improve your trading. Again, if you like this video, if you learn more about stock market, crypto market, everything in between, make sure you go subscribe on there. As always, peace.